Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex Analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, USD JPY, GBP JPY and many more. So let's get started. So this is the Forex chart of gold USD in front of us right now, and as you can see that there is still not much movement on the chart of gold USD. If you have watched my previous video on gold that I uploaded yesterday on Saturday, then you can easily recognize these lines because we have talked in detail why these levels are important and how 1790 is acting as a magnet for the gold USD chart right now, because you can see that whenever market is trying to go up or whenever market is going down, it is coming back to the level of 1790 again. Okay, and to understand the movement of the chart of gold USD, we also need to understand the chart of US dollar. So at first, let's try to understand what is going on in the chart of dollar here, because as we all know, it has a correlation with the gold. Whenever dollar goes up, gold goes down, and when dollar goes down, gold goes up. So US dollar is extremely important. The chart of DXY is very important if you want to become a profitable trader on the gold. So as per our expectation, as expected, okay, market did go up yesterday, and after reaching this level, it faced selling pressure, or there was a resistance at this level. As a result, market failed to cross the level and market did go down, and during this level, this candle, gold also formed a big green candle. When gold formed a green candle here, it was a time when US dollar failed to cross the resistance and formed a red candle here. Now you're getting the point here why I'm discussing, or why I always discuss the chart of DXY here. So this is the correlation. Whenever US dollar goes up, gold goes down, and when gold goes down, dollar goes down, gold goes up. So ultimately, the US dollar has failed to cross this resistance level here, and the ultimate resistance is at 92.78 to 92.88. This is the resistance level on the chart of US dollar here, and dollar has failed to cross it. But one thing that we need to focus here is that though it has come down, but it did not break the previous low. This was the previous low here, but market did not cross the previous low. And if we join these price levels here, we are getting a trend line here, which means that US dollar, if we just focus on this part of the dollar here, then we can easily see that dollar is in uptrend right now, and this looks like an ascending triangle pattern somewhat. So in a market scenario like this, whenever we see a market scenario like this, when we have a resistance at the top and market constantly forms higher lows, yes, higher lows, then there is a good possibility that at one point of time, listen to me carefully, at one point of time market will break the resistance, because market is constantly forming higher lows. Market is not crossing the previous lows. So bulls are definitely very much strong in the market, and at one point of time they will break the resistance. Okay, so the next support for the US dollar is this trend line, as you can see on the chart here. So definitely this will be the next support for the market. So right now it is in the middle. So when dollar will be coming down and take support here, or will come down to the trend line, just observe the price. If you see that dollar is taking support at the trend line, then you'll get a confirmation that yes, at one point of time we will see some good move on the chart of US dollar, and boom, there will be a breakout. Market will cross this level. I'm not saying that today you'll get some big moves in the market. Today or tomorrow there will be a good movement on the chart of US dollar. So this is all about the US dollar, and right now let's concentrate on the chart of gold USD. So this is the chart of gold USD, and as I have clearly mentioned on my previous videos as well, that this is not the ideal position to do anything on the chart of gold, because see, this is the chart of gold, and if I just ask you one simple question, do you think that this particular portion of the market deserves your hard-earned money? Just think, in a market condition like this, where you don't know whether market will be going up or down, whether market will go up or down, you do not have any clarity about the market. Even I also do not have any clarity about the market, because traders like you, traders like me, we do not drive the direction. So when we do not have a clarity, proper picture about the market here, do you think that you should invest your hard-earned money in a chart like this? Definitely not. And as I have clearly mentioned on my previous videos, that gold is the best example of volatility contraction pattern, which means that whenever market whenever market gets very volatile, it takes rest. Again it gets volatile, then again it starts taking rest. So right now gold is taking rest here, so there is a good possibility that one day or 2 days you will see some heavy movement on the chart of gold USD. And as we have already looked at the chart of dollar here, so we have understood that there is a good possibility of a breakout on the chart of dollar. So in case there is a good breakout on the chart of dollar here, then there will be a selling on the gold. And if gold crosses this particular level here, okay, you just draw draw lines like draw lines here. Okay, you just join this level here. Okay, the upward level is 1800, and at the down you have got at 1780. So this is the narrow range for the gold right now. So in case it crosses this level, you can think about buying, and in case it crosses this level, you can think about selling. Just confirm with the chart of DXY, because that is the main market driving factor right now. And on the other hand, if we look at the Forex sentiment meter here, you can see that the Forex sentiment meter, 67% traders have taken long position and 32% retail traders have taken short position. So 67% retail traders are thinking that market will be going up. And you'll find the Forex sentiment meter on my website avilashhazarika.com under Forex 101 section. So majority retail traders are thinking that market will be going up, and as we all know, 90% retail traders lose money. So generally I prefer to take trades against the sentiment of the retail traders. So in this case, so there is a good possibility also from the sentiment meter that there is a good possibility of market going down. And already we have looked at the chart of dollar. Dollar is also indicating that there is a good chance of a breakout, because dollar is constantly making higher lows. So let's see. Do not trade right now, because I have said, and I hope that you have also realized that this chart is not a good for you to trade right now, because this is your hard-earned money. You should respect your hard-earned money. And my dear friends, recently I have launched a pro trader program where you can be a part of my analysis, where I share the best trading opportunities on the market, not like the gold USD chart right now. Okay, so that you can make money from the market. So if you're interested, just go through the information here, and you'll find the information on the pro trader section on my website. So thank you so much. All the best. Take care. See you tomorrow. Bye bye.